Hey everybody, and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse, and today I thought we would focus on Beyond Meat and what's going on with the stock right now, because I could imagine a lot of people are worried. It has plummeted down almost 15%. It has stabilized a little, but it is pretty downwards anyhow. So let's just take a look at the market here. So if we take a look at the market here, we can see that it is down right now about minus 12.16. It was actually down to around 92.66, 91.99 there. It's almost up to $95 now. So it plummeted really hard, especially in one day or just actually a few minutes after opening. It just went down like crazy. And my understanding from my Discord channel also is that it went down, or pre-market, it was down quite a lot. So guys, as always, I would appreciate an early thumbs up to help spread this video to more people out there. And don't forget to subscribe if you want to be part of this channel. But again, so what is going on? So why did it plummet? Well, it is actually related to what they expect for the Q3 earnings coming up now on November 10th. So as I think many of you know, in Q2, we had pretty good earnings. We had about $149 million. It went past what a lot of people thought, but they actually did warn us in Q2 that even though a lot of analysts expected them to be around, I think, $150 to $160 million in Q3, they themselves said actually that they could only see themselves probably getting around $120 to $140 million, and Rona and the Delta variant being one of the biggest reasons there. But now it seems that they've had a harder time than they thought, and they're actually downgrading themselves, not an analyst or anything like that, but themselves. They're downgrading it to around $106 million. And as it states here, it's multiple factors why this has happened. And as it states here, while the company continues to study the drivers behind the quarter's performance, the company believes demand was impacted by broader ongoing macro and microeconomic factors, including, among others, the effect of the Delta variant. The company also experienced a decrease in retail orders that persisted longer than expected from a Canadian distributor, coinciding with the reopening of restaurants. Expected incremental orders that did not materialize from a change in a distributor servicing one of the company's large customers. Observed delays in distribution, expansion, and shelf resets believed to be driven by customer labor shortages, and incurred shortfalls at certain U.S. food service customers believed to be driven by the effects of the Delta variant. And it also states here that they suffered other challenges in operations that led to unfulfilled orders, with severe weather as a key driving risk, resulting in the loss of potable water for 2 weeks in one Pennsylvania facility and water damage to inventory in another. So obviously that will, if it's a facility that they're actually using to deliver their food right in the US and in North America, this will obviously impact it as well. So I would say there's no bigger surprise there, right? That if they're actually going even lower, or believe themselves that they're going even lower than they expected already, because they expected lower numbers, 120 to 140 million, compared to what analysts thought, who were more bullish on their numbers. And trying to be cautious. I don't think that's a smart move. And now being even more cautious then regarding this real situation. And I think long term, this is a good idea, right? Because you don't want people to start panicking like crazy after the Q3 earnings, because they could be even worse then, right? So I do like that they're transparent with this information. But what I find interesting is that I do understand how people and investors normally react to this kind of news. But it actually came out some really excellent news, I think it was yesterday, regarding that the McDonald's deals. Well, as we know, right, the company has a 3-year relationship with, or partnership with McDonald's, right, on an international scale. But it hadn't really started going on in the US as of yet. And now, I think a week or 2 weeks ago, it said that it was going to start to test at only 8 restaurants in the US. And we know in the US it's about 18 to 20,000 restaurants. So 8 restaurants really isn't anything. But as I told you, I think this will just be a small taste of what's yet to come. And there are one of the analysts from BYND actually stated what I suspected to happen soon. Maybe not this big, but it is that it might actually be that next year, he believes, his name is Peter Saleh, that they'll actually move on to about 13,000 new locations, which is super huge, right? 13,000 new McDonald's locations. So as they state here, quote, "We believe interest in adding a plant-based meat option to menus is accelerating domestically at quick service operators. And also, we believe that 2022 will be a pivotal year for plant-based meat in the QSR segment, with many brands introducing their products or increasing their offering to further differentiate themselves from competitors." And we know that Beyond Meat is the industry leader. And as I stated, they actually believe that the Mac plant will be at about 13,000 McDonald's locations, which could actually add another $200 million per year in revenue for Beyond Meat. And that's incredible numbers, right? So in that way, I'm a bit surprised that people would split after that kind of news. But then again, that's usually the case when it comes to quarterly earnings. That a lot of investors out there, they are quite short-term in their way of thinking about their investments, right? Even though they call themselves long-term investors, they do often care about the short-term noise. And this is what it is for me, short-term noise. It's a bit annoying. It doesn't bother me too much, but I did actually go in a couple of days ago with about $6,000 to $7,000 more of an investment in Beyond Meat. I thought $107 felt good. I knew there was a chance that we could see it around $100 to under $100, maybe $98, $99. But I felt I don't want to risk it. I'm a long-term investor. Why should I quibble about $6, $7? Obviously, I did not imagine it going down to about $92 at one point. But that's okay. Again, a long-term investor here. I'm not too worried about this. Again, short-term noise for me. Someone in my Discord channel, guys, if you haven't seen my Discord channel where we talk about Beyond Meat and other plant-based companies, take a look in the description. It's free. But one of the people in there asked if it's a good point to go into the company now, start buying shares. Well, in my opinion, it's not financial advice. I think it's an excellent opportunity. Around $90. That's an amazing. Under $100 is amazing. I thought 110, 120 is really great numbers too. But obviously this is a good time. But that's just my opinion. All right, guys, that was it for today. I truly hope you got a lot of value from today's video. And if you did, make sure to smash that like button. And if you want to keep getting more information regarding Beyond Meat or other plant-based companies out there like Tattoo Chef, Oatly, or The Very Good Food Company, to name a few, make sure to subscribe and don't forget that bell button. And again, if you want to be part of the free Discord channel, make sure to look at the description and just join us. Thank you, folks. I truly appreciate your help. And as always, this was not financial advice. It's important to do your own due diligence and invest safe. Folks, I hope you have a great Friday. Hope to see you soon, and peace out.